There we go. Now my mic's on. Welcome back to Game Trader Live for the month of September 30th, 2025. It's the end of the third quarter, and it's time for us to break down charts from the last 3 months, look at maybe if there's some kind of hint as to what could happen going forward. We're gonna look at some charts. We're gonna talk about the EA Sports washing news. We're gonna talk about GameStop and their special dividend of stock warrants. I believe that effective date is October 3rd, so quite timely information for the folks at home here. Thanks for joining us. I'm broadcasting on my new computer with a new microphone and a new camera, so hopefully you appreciate all of this fantastic new production value that I have, even with start screens and maybe even a BRB screen. Bam. What about that right there? What about that? What about that? And back. Cool. Well, thanks for joining us. If you're joining on YouTube, hello YouTube. But if you're here on Twitch, don't be afraid to ask me any questions. So let's get into it. The S&P 500 chart is rather interesting. We got a outside quarter last quarter to end the month of June, right? We went above. We actually had two consecutive outside quarters. So we broke down in the quarter ending March 31st, 2025. We broke well below that after Liberation Day because the tariffs spooked the market, only to come all the way back up and take out the all-time high by the end of the quarter, which ended June 30th, 2025. So we had an actionable buy signal above 6,215 and 8 cents. And guess what? The S&P 500 broke out above that to new highs. We actually closed the quarter close to the all-time high of the S&P 500, which is around, I'll give you the exact number. The all-time high is 6,699 and 52 cents. We closed the quarter at 6,687 and 6 cents. So, on the weekly chart, it was an inside week. It still is an inside week. This is one of the weird things about this technical strategy that I use to look at stock charts. In that there are times where a bar for the month ends before the weekly bar. See, like the month ends on a Tuesday, but the week doesn't end until Friday. So this is one of those things where the market won't fully decouple, is the term. These charts won't fully decouple until next week. But that doesn't mean that we can't have some valuable information to ascertain from these quarterly charts, and that's what we're going to start with. I like to start with the broader market. The S&P 500, I think, is probably the most important thing to pay attention to. You could argue that the Nasdaq 100 is also important. So here we are. The Q's inside week, but the week is still going. Hit an all-time high this month, and like I said, it took that outside bar to the upside. So there's no reason to be selling this market here. Technically, that means the chart does not indicate a reason to sell. The chart. There are all sorts of other reasons to want to sell into this market right now. Be it maybe you're up a lot, maybe you're just trying to manage your risk, is something that I preach a lot on this show. But yeah, the S&P recovered from the panic earlier this year and is at an all-time high. This is the largest index, right? It has 500 stocks in it. Some rebalancing has occurred. I think Coinbase and Robinhood have been added to the S&P 500. Some stocks have left the S&P 500. At the end of, during October, they'll do a rebalancing because some stocks have become too big of a component of the S&P 500, like Nvidia or Apple or Microsoft. So we're heading into what is usually a volatile period for the stock market. Oh, we're going to get to EA, sir. We will get to EA shortly. But I like to look at the broader market. And I also like to give people a chance to get into the stream, because if I just jumped straight into EA, you would have missed it already because you're just getting here. The internet works in mysterious ways. It takes time to notify the folks at home that the greatest stock trading show on Twitch is live and on YouTube, wherever else you find us. But yeah, so the S&P 500 closed near its all-time high. Had a buy signal, so if you want to continue to buy it, you're going to watch for a breakout above 66.99 and 52 cents. That's on the S&P 500, which is the broader index. If you're looking at the ETF for the S&P 500, it's the same chart, right? But it's this is the share price of the ETF. You would be a buyer above 667 and 34 cents. So during the quarter, we hit 666. Right? During the quarter, we hit 666, but we're above it now. And numbers are meaningless, but I think there's some people out there like Taylor Swift who focus on numerology probably more than the average bear. But yeah, this is not a good market to be a bear. You've probably gotten killed. And I think EA will be a good example of why I'm not really short many things right now. But I am thinking about one. By the end of this stream, I will suggest a single stock that I considered shorting. I haven't done it yet, but I am thinking about it. So that's what we in the business call a tease. But yeah, so the S&P ETF, the SPDR, as they call it, the S&P 500 Trust Series ETF, you would be a buyer on a breakout above 667 and 34 cents. That would be a quarterly buy signal that would go all throughout the rest of the year. That would also be your stop loss if you are buying this trade specifically. Now, I don't really trade the S&P 500 unless it is a period of intense volatility and I want the liquidity of such a large asset. But I normally look at individual stocks, but it's important to look at the broader market because 50% of your stock's movement is tied to whatever ETF or market or mutual fund that it's in. There's so much money slushing around in those funds that it affects share price movement, maybe on a given day. Over the long arc of time, the fundamentals of the company will matter, and that will lead to, if a company goes bankrupt, the stock's going to go to zero, obviously. If a company's doing well, it's going to go up. So 50% of the stock's movement is attributable to the broader market. So that's why I start the show looking at the markets. But let's look at the Qs. This is the NASDAQ 100 ETF. And similar story, right? We had an outside quarter in the quarter ending June 30th, 2025. So you had a low of 402.39, a high of 552.80. We took that out. We closed near the all-time high of the NASDAQ 100 as well. This is an ETF that has Tesla, Nvidia, Apple, Google, Microsoft. Most of the large tech companies are in this ETF. And they're a large part of the weighting of the ETF as well. So if we want to look at that, I can just kind of read it to you. The top holdings of the Invesco NASDAQ 100 ETF, which is up 20% in the last year. But here are the top 10 holdings from smallest to largest. They comprise 52.82% of the entire ETF. That's kind of crazy. So, number 10, Netflix with 2.76%. Number 9 and 8, because Alphabet has GOOGL. So both of those shares are 9 and 8. 2.9%, 3.1%. So honestly, Google's really 6% of this thing. At number 7, Meta at 3.52% of the Qs. Just above that, Tesla, which had a hell of a quarter, up. It's at 3.53%. And then the top 5 here, Amazon at 5.18% of the NASDAQ 100. Broadcom at 5.58%. That's number 4. Number 3, Apple at 8.25% of the Qs. Number 2, Microsoft at 8.36% of the Qs. And the number 1 stock weighting in the NASDAQ 100 ETF is NVIDIA at 9.65% of the entire ETF. So if you're someone who's like, oh, I don't own NASDAQ, or I don't own NVIDIA, right? You do. If you own any kind of ETF, if you own any kind of mutual fund, you probably own some NVIDIA, even if you don't know you do. It is the largest company on earth. It's the largest tech company, and it is the largest weighting in the NASDAQ 100. So that's a little bit of interesting information for the folks at home. Oh, Mamu Bear, thank you for the tier 1 sub. 42 months, currently on a 28-month streak. We appreciate you, dude. Congratulations on that streak. That's a long streak of doing it for Shack News right there. But let me get back to doing it for Shack News. Let's look at these Qs again. So yeah, same thing. Very similar chart to the S&P 500. Outside quarter, last quarter, broke it out to the upside. You're going to look for a buy above 602 and 87 cents. And like I said, 10 stocks comprise 52% of this ETF right now. So you own all those stocks. If you're trading the Qs, if you own the Qs, or if you own any mutual funds that are like tech growth, you probably own those stocks indirectly. And they're all massive companies at this point, right? We're talking, I think in the case of Netflix, which is the quote-unquote smallest company in the NASDAQ 100, that's still a $500 billion valuation. That's kind of crazy. And I think Google just joined the 4 horsemen of the tech apocalypse. NVIDIA, Apple, Microsoft, and Google are now all valued over $3 trillion. That's interesting. I guess Google is slightly less than $3 trillion right now. During the quarter, it got above the $3 trillion valuation. So there have now been four companies that have surpassed a $3 trillion valuation. That's kind of crazy, if you ask me. I am so happy that we have spammers here trying to sell us cheap follows. No deal. Thank you, moderators, for banning them. So yeah, the NASDAQ 100, like I said, the NASDAQ 100 buy signal above the all-time high of 602.87 cents per share. What do you sell for cheaper, Donovan? Let's look at the Dow Jones. I don't even have it on my watch list. I don't really like the Dow Jones. Oh, followers. Thank you. We do have sub hype too. Oh, thank you for the sub hype. Yeah, we have. It's a different story here in the Dow Jones. The Dow Jones had an outside. It didn't actually have an outside quarter. It just had hammer back into this range, and then it broke out above it. So the Dow Jones is hitting an all-time high this quarter. I'm zooming out, right? Let's zoom out for a second. The NASDAQ hit an all-time high this quarter, and the S&P 500 hit an all-time high this quarter. So basically, 3 things can happen. Actually, I guess technically 4. It can continue to break out to the upside. It could stay inside of this quarter's range. It could break down below it, or it could break down below it and then go back above it, or it could break above it and then go back down below it. That's the outside bar that we're talking about. So that outside bar was this quarter here that ended in June. And we had an outside bar to the upside in the S&P and in the Qs. And in the Dow Jones, it was a hammer up. I don't really recommend people invest in the Dow Jones. It's 30 companies. I I don't like all of the companies in the Dow Jones. So I, as a stock picker, I recommend looking at individual stocks. But while I have you guys here, did you hear the news? EA Sports, it's in the game of going private. That's a scary looking bar right there. If you're a short, this is going to kill you. This is how shorts die. You wake up one day. Let's look at the daily chart here. You're just minding your own business. You know, you're like, oh, I don't think EA's doing very well. I'm going to short this company. And then blam, out of nowhere, stock goes up 15%. And this happened at the end of the day on Friday. It was like the last hour of trading. So there were margin calls going out. And it was a rumor at the time. Wall Street Journal was reporting that EA was going to go private in a $50 billion valuation leveraged buyout. Now, we'll get into what a leveraged buyout is. I actually read a handy-dandy guide that I wrote on shacknews.com. Now, what happened over the weekend is the news actually did come out, and it was higher than expected. I believe it's $210 a share that the deal will close at, and we're talking about a stock currently trading for $201.70 in after hours. You know, had a big day on Monday. It was up another 5% almost. And, you know, it's just kind of churning around now. It's going to be, I'm not saying this in the sense that, like, oh, don't hold your money. If you are an EA shareholder, or like if you were an EA shareholder last Tuesday, congratulations. You just made a shit ton of money, and you can wait for the Saudi deal to close, or you can take your money and run. But if you want that last $8, you can hang on. I have a feeling this deal will close because one of the acquiring companies is the son-in-law, or the firm run by the son-in-law of the President of the United States. You know, Ivanka's husband, Jared. EA went to Jared, and they got a $55 billion deal to take the company private. Some people are asking, like, what does that even mean? What does it mean to go private? Well, we have a stock chart here. EA Electronic Arts has been a publicly traded company for, let's see how long. Since 1989. EA has been a publicly traded company. That's when their IPO was. If you bought the IPO in September of 1989, you could have bought it for 48 cents split adjusted, and it's likely going to be taken out for $210 a share. So this is the long-term chart of EA. This is an example of, if you have an investment thesis, stick to it. In the long run, things can play out. Congratulations to anyone. If you're an employee at EA, and you made that money from vested options and shares that you got from your hard work, congratulations. I hope you can take that money and run and go find another job, because we're going to get into what going private means, and also the impact of a leveraged buyout. So yeah, it's being reported that $20 billion of this $55 billion deal is going to be debt put on the balance sheet of EA. And when a company goes private, it no longer has to report earnings results every quarter. So congratulations to everyone who hates the CEO Andrew Wilson and listening to his dumb voice on conference calls. We don't have to do that anymore, or we won't be able to do that anymore. But it also means that we're going to get less information about how EA is operating. EA honestly executed pretty well in that transition from digital, or, you know, from packaged goods to digital when it came to game sales. It's something like 80% of their revenues come from digital, either microtransactions or digital game sales, like downloaded games. I think EA was actually at the forefront of that. Now, we can talk about the monetization of their games and how it's kind of skeezy, but just from a pure operational standpoint, I think they did do a pretty good job executing in a difficult environment for third-party developers. Like, you could have bought this stock in 2012 for $10, and it is now going to be taken out most likely for $210. Donovan's saying, I had a friend ask me yesterday if EA games are fucked in the long term. That's a great question, Donovan. And your friend, as Jim Cramer would say, has horse sense. But yeah, let me pull up that handy dandy article that I wrote. So yeah, what is a leverage buyout, first of all? And what does it mean for Electronic Arts going forward? So a leverage buyout, pretty simply, is when a single company or a group of companies come together, borrow some money, and buy a company usually at a premium to what it was previously trading at. So, in this case, EA was trading at like 160, 170. The Saudi Public Investment Fund, Silver Lake, and Jaboofer Incorporated, whatever Jared Kushner's company is called, they came together. They decided to lever up the balance sheet of EA using EA's assets to create value for the shareholders to convince them to sell it. But yeah, this is a great question. We have a couple of really good questions in chat, so let me get at them. What does it mean to go private? There's private equity buyout. That's what this was. There's a tender offer. That's what Elon did with Twitter. And there's a management buyout. That's what Michael Dell did with Dell back in 2018. Now, most of the time when a company goes private, it ultimately will come back to the market at some point, because the company that invested in EA, like this triad of companies that invested in EA, they're going to want their money back. They're going to want to make money on this investment. And to do that, they're going to have EA pay down the debt, which leads me to Donovan's question. Is EA fucked in the long run? Maybe. Probably. I don't know. Because we don't know how this new triad is going to pay off this debt. There are a few ways. They could sell assets, right? So instead of shutting down a studio, why not sell it, right? So in the instance of BioWare, let's say that BioWare and their ethics and their style of making games doesn't fit well with the company culture at this new private EA. Instead of just killing BioWare, why not sell it off? What do you think BioWare's worth? What do you think those intellectual properties around BioWare are worth? Probably more than $0. So one of two things is going to happen. There will either be mass layoffs, or they're going to sell these studios off. It might go both. They might sell the studio and fire people. Or they might fire people and sell the studio. You know what I mean? Like the acquirer might buy them, but it might be both. So that's like, to answer that question, because I think, David, you brought up another one. What's going to happen to a more inclusive property like The Sims? And I brought up BioWare too, because I think they're a little bit more inclusive with what they allow in their games, right? The representation in like a Mass Effect or a Dragon Age, right? I don't think that these acquirers are going to be as quick to kill studios. I think they're more likely to sell off studios to other acquirers, right? There's, Google, there's Apple, there's Microsoft, who, they've famously bought a lot of things. I'm not saying Nintendo would be an acquirer of any of these things, but there's third party company like 2K, right? That is still publicly traded and still controlled by the public markets. That I think that some of these studios could end up being acquired or sold off in the interest of paying down this debt. Now, what does that mean for The Sims? I think The Sims is probably in trouble because they are very inclusive, and we don't know how involved Saudi Arabia's public investment fund is going to be in this new company, right? Like Andrew Wilson is staying on as CEO. Uh, this Jabufaroni pizza roll is staying on as CEO. So how much is he going to actually have say in the company, or is he just going to be a talking head puppet for this new triad that owns the company? That's one question we're going to have to ask. But there are already rumors that the company is going to push for AI to be used, cost cutting and layoffs, and probably, my guess, more aggressive monetization of their games. So you look at Madden, or you look at NHL, or you look at FC, right? Their sports franchises. They all have these ultimate team card pack kind of things. Would it surprise me to see EA keep Mass Effect, but do something really weird with it, like a season pass for a single player game? I know that's happened in other games. I guess the question is, how important is the money generated by these game studios to the acquirers? Are they more happy to keep The Sims going because The Sims prints money, or are they going to be like, well, I don't like this aspect of The Sims, I'm going to shut it down? I think a studio closure is less likely, but it's possible. It is definitely possible in the case of BioWare, and I guess, is it Maxis still that makes The Sims? Or who makes The Sims these days? Is it still Maxis, or are they dead? Are they dead? Maxis, and then it's also just The Sims Studio. So I would say that the people at Maxis are probably more at risk than the franchise, David, would be my answer. And I'm not cheering for this to happen. I'm just answering the question, like, what I think is likely to happen. Yeah. Yeah. I do think that a scanner brought up a point. He said the Saudi fund seems to be pretty focused on soft power development, so they're actually less likely to want to shut down a studio than Kushner's group. That's probably true. We are in an era here in the United States of media cancellation and an anti-woke movement. So if the president's buddies find that EA is too woke, maybe that will lead to some of these stupid decisions being made and franchises being shut down. But once again, is this Jaboofer going to do anything about it? Because, yeah, we've seen the Saudis invest in a lot of things, and they've kind of been passive investors. They're doing this. They do a lot of this because they're trying to improve their image globally. It's called sports washing, right? They invested in the Live Golf Tour, and they gave people hundreds of millions of dollars, billions, really. They bought Cristiano Ronaldo. They own SNK now, and they made Ronaldo a character in Fatal Fury. So it's like, where will this go? We don't really know. How involved will Saudi be? We don't really know. But this is a constant effort of the last, I'd say, 10 years on the part of Saudi Arabia to diversify away from oil and gas and towards entertainment properties. Cuddlier, friendlier rebranding of the Kingdom of Saudi Arabia, which has murdered journalists. So, they're just trying to be cool, guys. We own Madden now. And this is like a backdoor way into getting involved with the NFL. I don't know if an NFL team would ever sell to the Public Investment Fund, but they now own the biggest NFL game, right? The only NFL game. They now own the only NHL game. They now own the only, whatever the hell you want to call the FC game. But I think it's less likely that the Saudis and the authoritarian Muslim regime over there, I think it's less likely that they're going to screw this up, and more likely that Kushner's group and that influence will end up screwing the pooch here. But talk about a bunch of terrible options, right? Yes, they are trying to break the attention economy. They're trying to pay no attention to the dead journalists behind the curtain. Let's talk about fun things like Riyadh season, and we're gonna have WrestleMania. We're gonna have the Royal Rumble, baby. Like it's a very weird moment where the Saudis are actively trying to rebrand as a fun, entertaining place, and yeah. So yeah, Godspeed, Jaboofer Jones, CEO of EA. But yeah, I don't know. I think that's about it though, right? Like what's going to happen to EA? We don't know. I'm not in the prediction business. When I look at something like this, I try to look at all the possible outcomes, right? But at the core of it, they didn't invest in this company to lose money. They did it to make money. So EA was already profitable. But to pay down the $20 billion of debt, they're either going to have to sell off assets, improve margins by laying people off and employing things like AI instead, or both. So it remains to be seen. Like, will the margins improve at EA? Maybe. But what that means for things like what Donovan said, like, if you thought MUT was a money grab before, yeah, like, who knows where this is going to go? I'm not one to try to predict, but I like to look at all the possible outcomes, lay them out, so I know what could happen. But, you know, in the realm of this show, it's really sad because this is one of the biggest companies that we cover here at Shack News in our financial coverage universe, and now we're going to have less information. They are now a walled garden. They're going to be a black box. They're not going to tell us what they're going to do. We're going to hear about this through reports from like Jason Schreier or whoever that gets the scoop about a studio closing. Like, we're going to get informed by employees at EA about what's going on, or former employees at EA about why they're being laid off. After X amount of years, I'm leaving EA. We're going to see a lot of that here in the next few months would be my guess. But like I said, if you worked at EA for a long time and you had vested options, you could take the money and run, and maybe you could do something like what happened with the Expedition 33 studio, right? Where it's a bunch of former EA people come together and make a new thing. Like, that's possible here. So I yes, there's doom and gloom, but there's also a lot of hardworking people at EA who just got a giant bag of money, and maybe they can do good with that. So yeah, it's messed up what's happening here, but maybe there's a chance it won't be the worst thing ever. I doubt it. But yeah, I don't think putting a bunch of debt on the balance sheet is going to lead to innovation and game development. I think it's going to be a aggressive monetization strategy, be it selling studios, firing people, implementing AI, a combination of those things, or even just shoving monetization into games that don't need it, right? Mass Effect with a card-based mechanic, you know, or something stupid, right? Something stupid will come out of this, for sure. The mobilification of all of these IP, because at the end of the day, like, you know, there's a lot of IP there. A Mass Effect gacha game, right? I'll be honest with you, I want to stop guessing these things because we're putting out these things in the universe and they're going to come back. And I'm going to feel bad when that happens. So please, whoever's watching, forget that we said Mass Effect gacha. For the love of God. You also have to wonder how game development changes. The priority of accessibility and inclusion may not be very good. I don't think accessibility will suffer, because I do think that's like an industry secular shift, man. And like, colorblind settings make it easier for people to play your game. That means you'll sell more games. having the accessibility settings right when you start the game, something that I think Ubisoft does a great job of, like, and other studios are starting to do that too. That's like a best practice that a soulless company will view it as, hey, we're going to sell more games if we do this. Now, the inclusion part of your point, Bill, I think is very sound. Like, are these companies going to view inclusion as a way to make money? Probably not. Are their own ethics going to get involved in the management? Probably. So I think that's the thing that's going to be scary. And yeah, do we even think we'll see another Mass Effect? I feel like anything not coming out by the end of 2026 is in danger for EA. I think it's a good question, Donovan, but like it's a sunk cost question, right? Like how much money has been invested in the development of Mass Effect? And do they want to eat that? Or would they rather salvage whatever's been done on the next Mass Effect or the next Dragon Age, right? I think they already shipped the Dragon Age. But like the next like whatever we get from that franchise. I don't think this is the kind of company that's going to shut down the IPs. I think that the game developers may be fired and the creative people inside of EA who do good work, they may lose their job, and that will lead to a overall decrease in the quality of games coming out of Electronic Arts. I think that's a very possible outcome. Yeah, they could also start licensing stuff out, right? I think that's like fire the studio, gut the studio, keep the IP, license it out to another company, and just make the licensing revenue. Because when you make licensing revenue, the margins are close to 100%, right? And that's what they want to do. They want to improve their profit margins so that they can pay down their debt. And then ultimately, my guess is when it's all said and done, they're going to want to flip EA back to the stock market. Or to some other buyer, right? Maybe Microsoft. Monkey paw curls. So, yeah. I think everyone in chat's making some really good points. Yes, I think that Electronic Arts should license the NHL franchise to Shaq News. I think we could do a great job with that, Bill. It's a very sound point on your part. But yeah, do we want to talk about other companies? You guys have any other questions or thoughts on EA before we move on? I'm happy to keep talking about it, but I think we've kind of hit a lot of the concerns. If you want to spend lots of money, Command and Conquer? I mean, I talk about a gutted studio. Westwood is gone, but the IP exists. Like what? I don't want to give these people free ideas, man. Like I don't want to put that out. Don't put this on me. I don't want to give them free ideas. That's actually a good segue, Bill. Bill had the audacity to bring up GameStop. Power to the players. So yeah, if you guys are done with EA, which I think we've had a nice long conversation about EA. If you have any other questions about it, bring it up in chat. But yeah, Bill says, I was eating dinner the other night, walked by a table, and someone had a laptop open with GME's stock chart. And I forgot to tell you until now. So one of the more interesting things to happen in the last quarter since the last episode of Game Trader Live is that GameStop announced a dividend of warrants to shareholders. So for every 10 shares of GameStop that you own, you have the right to buy one share between now and I think it's like 2032. So they plan on they expect to distribute 59 million shares on October 7th, the distribution date. This is for shareholders as of the close on October 3rd. So this is very timely information. If you want to get in on this, you can. Now here's what's interesting about this. what I find very strange is that you're buying these shares at $32, right? That's what the warrant is for. If we pull up the GME chart, GME is currently trading for $27. Why would I buy shares of GameStop? Like, why would I pay a $5 premium for GameStop when I can just buy it for $27? Also, why would I buy GameStop at all? This CEO of GameStop has fucked me multiple times with secondary offerings and diluting shareholders and just being an all-around shithead. Why would I want to invest in GameStop at a $5 premium to where it's trading right now? And the answer is to screw over the shorts. But is it going to work? So far, no. But the actual results of GameStop were pretty interesting. They had the tailwind of the Nintendo Switch 2 launch, which actually led to an increase in hardware revenue, and their collectibles revenue does seem to be turning the table. Like, they're making money, they are a profitable company now, and they are growing in the collectible space, be it trading cards, plushies, whatever. Like, the things that they're selling in their store are actually moving now. They are, I would say, the largest online grader of cards through their partnership with PSA. They're doing some interesting stuff on that front. But like I said, I don't trust the CEO. And I think he's kind of a douche nozzle. Because every time we have a short squeeze, they announce a secondary offering that tanks the stock. Every single time we have a short squeeze, they keep screwing us over. What I do find interesting is that we hit a new high, a post-2001 high. I'm sorry, no. A post-2024 high of 35.81 before the announcement of the debt offering that was dilutive to shareholders that they did. So it's still a series of lower highs, right? We still have a series of lower highs, but that series of lower lows seems to have stopped. Now we have higher lows. I guess what I'm getting at, I wouldn't be short GameStop. I think that's a dangerous game. And honestly, going back to EA's chart, imagine being short EA. And you're like, oh, look, EA had a terrible day on Wednesday. Oh, I'm making money, right? I'm going to hold on to it. Trades inside day, and then it rips your face off. You lose $25 a share on your short position. Over, like, look at this. Down on Wednesday, trades inside day, breaks out to the upside on that news. At the end of the day on Friday. This is why I'm not short anything in the market right now. I am thinking about shorting something, and this might be a good transition to that. But yeah, I wanted to mention GameStop. Actually a profitable quarter. Again, it looks like they're going to have a profitable year. It looks like the hardware revenue is on the right track. Obviously, software revenue is a problem for them because physical media is not selling nearly as much as it used to. And now with this advent of Nintendo Switch 2 game key cards, I would say that physical media is really in trouble because Nintendo at least was like the one place where it was still 50-50 physical to digital. I think we're going to see Nintendo over time become 80% digital, maybe 20 to 10% physical media, which sucks. But at the same time, like, this is the way the industry is going. Nintendo's kind of been dragging their feet. At least there's still a physical product that they can put on the store shelf at GameStop and Best Buy for now. But gamers don't seem to like the game key cards. And I think that's going to impact a company like GameStop. It's going to impact Walmart. It's going to impact Best Buy. But yeah, there's your GameStop look. So, you guys want to hear? You know what? What if we watch something together? You guys want to watch something together? Have a little bit of a reaction here with me. It's not a live reaction because this already happened. But you know what? What if we go to my favorite social media platform, Blue Sky? What do you guys think? You guys like Blue Sky? You guys want to watch a Blue Sky post with me? What do you say? Are you excited? Are you guys excited to watch a Blue Sky post with me? I don't think you guys are excited enough. I need more excitement about Blue Sky in the chat. I know you guys love Blue Sky. Come on. Come on. You know you want it, right? You want it? Yeah, you want it. We posted something to Blue Sky on September 17th. It is a live AI demo fail from Meta Connect. How about we just give this a listen? Oh, Blue Sky, why aren't you unmuted, dude? I thought you were the best social platform.
Oh, what do you think? Maybe let's make, I don't know, what should we make? Maybe like a steak sauce, maybe Korean-inspired type thing, just to show what the live AI is like.
Yeah, let's try it. It's not something I've made before, so I could definitely use the help. Hey, Meta, start live AI.
Starting live AI. I love the setup you have here with soy sauce and other ingredients. How can I help?
Hey, can you help me make a Korean-inspired steak sauce for my steak sandwich here?
You can make a Korean-inspired steak sauce using soy sauce, sesame oil.
What do I do
brown
first?
sugar.
What do I do first?
You've already combined the base ingredients, so now grate a pear to add to the sauce.
What do I do first?
I want to pause it here. It told you to grate a pear. It told you to grate a pear. If you look at the table, there are no pears on the table. There's only lemons. He has no pears. If this is a live AI, if this is live AI and it's supposed to be interacting with the real world, why is it telling you to use a pear? There are no pears on the table. Also, he interrupted it mid-prompt, and it completely derailed the demo. But let's continue.
You've already combined the base.
What do I do first?
You've already combined the base ingredients, so now grate the pear and gently combine it with the base sauce.
All right, I think the Wi-Fi might be messed up. Sorry, back to you, Mark.
It's all good. You know what? It's all good. It's, the irony of the whole thing is that you spend years making technology and then the Wi-Fi at the day kind of catches you.
The Wi-Fi? The Wi-Fi. Really? Blaming the Wi-Fi for really a horrible failure. And yeah, Scanner, thank you for bringing that up. I'm glad you brought that up. There's no grater on the table either. There's no peach and there's no grater. What is this AI even talking about? Do you know how much money Meta is spending on their AI development? How they're handing OpenAI employees, handing them $100 million stock pay packages, vested options over $100 million to leave OpenAI to join Meta AI. And this is their public demo. This is their public demo. But it's not over. You know I love Blue Sky. Hit me with another one, right, Shaq News? Come on. Shaq News on Blue Sky, bring in the heat. Can you hit me with another one, Shaq News? You know I love these Blue Sky posts, right, guys?
Now,
Pause WhatsApp video call.
there we go. Uh-oh. Well, let's see what happened there. That's too bad. I don't know what happened. Maybe Buzz can try calling me again. All right. Well, I got a missed video call. Okay, there's the actual video call. All right. I'm just going to pick that up with my neural band.
So he said he's going to pick up the call with his neural band. There's a wrist strap that he's wearing that's supposed to track his hand movements. He's also wearing these glasses that are pretty ugly, honestly. Look, I think the Meta Ray-Bans are a cool idea. I think that wearable point of view capture is going to be important. And I even think heads-up displays on a screen in a glasses format is probably going to be a successful form factor. But this demo is complete ass.
This is, it happens. Yeah, let's, what do you think? Let's just go ahead and...
WhatsApp video call.
Even the audio is crapping out on them. Let's go for a fourth. All right. Try it again. I keep on messing this up. And if not, then we'll go for the less fun option. Okay. I don't know what to tell you guys. All right.
I don't know what to tell you guys. I don't know what to tell you guys. This is your CEO on stage, caking his pants, saying, I don't know what to tell you. I don't know. I'll tell you one thing, Mark Zuckerberg. This never happened to Steve Jobs. Did not. Now, there were times where the FaceTime demo didn't work at an Apple event. But he sat there and made sure that they would get the demo done. But we're going to have Boz come out here, and we're just going to go to the next thing that I wanted to show, and hope that will work. Man, talk about some high-quality posts there on Blue Sky from Shaq News. If I were a person on Blue Sky, I would certainly follow Shaq News. I don't know about you. They're bringing the heat over there. Anyway, let's look at the meta chart. Oh, what day was that? What day was that? Hold on a second. I need to, you know what? What day was that? I'm kind of curious. That might be useful information, right? I was up late. It was September 17th. I was up late covering this event with Bill Lavoie and Sam Chandler, our Australian correspondent. September 17th was here. Stock closed at $7.75 and 72 cents. It's currently at $7.33 and 75 cents. Man, I wish I shorted it on that. But man, I am really thinking about shorting Facebook or Meta stock. Meta is valued at, and you'll notice, I never say worth, right? I say valued at. I don't say worth. There's a difference. Meta is valued at $1.84 trillion. $1 trillion. And some fundamental analysis real quick. That's 27 times trailing earnings. That's 25 times forward earnings. That's 2 times its growth rate. That's 11 times its annual sales. And that's at a book value of 9.5. Now, it's a tech company. They have 3 billion users, right? There's a lot of reasons to not want to short this stock because we are in this era of the internet where there's 2 tiers, and Meta is definitely one of them. But now they have 2 divisions that are just setting money on fire. The VR Reality Labs division, and now this AI stuff. If this is what you have to compete with Google and OpenAI and NVIDIA and Apple even Apple might have a better product than this shit. So it's like all of this money, hundreds of billions of dollars are being committed by Meta over the next 5 to 10 years in the interest of developing AI. And this is what they're doing? And then they also announced a Meta AI app that's going to have a AI slop feed that's all just AI generated content. It's going to be a social media platform only for AI generated content. Not to mention their own platforms are having issues. They even said we have a Meta Business Suite app. They disclosed a big change to how they're going to view the success of posts. they're not going to broadcast the reach numbers anymore. I thought that was interesting. But they haven't even explained what they're doing. They said new viewer metric for content published after July 31st, 2025. Use this new metric to help better understand who sees your content across Meta technologies. The reach metric will no longer be shown on Meta Business Suite, but you can still find it in Ads Manager. What's interesting is I can still see the number in Meta Business Suite. So they haven't even done what they said they were going to do at the end of July. Strange, right? So yeah, if there is one stock that I'm interested in shorting, it's Meta. But like I said, the broader market could keep dragging this thing higher. And the jaboofers who are, AI is the future, right? AI is the future. Only AI. I will only invest in AI. AI is the future. AI is the future. AI is the future. Right? Those jaboofers, they think this is a great strategy. They still, you should have seen, it was like a case study in the state of the human condition. The way that people on Blue Sky shat all over this demo. The way people on YouTube were kind of down the middle. Some were defending AI, some were shitting all over it. The fact that Korean people showed up on Twitter and YouTube to tell us that we're just dumb Americans and we don't know how to make the proper Korean barbecue sauce is fascinating. And then the people on TikTok reacting to this, just having a blast and laughing at it. So it was educational for me to see how humans were reacting to this failure. Because this is one of the richest men on earth, and he's publicly failing. And this is something he's already sunk over $100 billion into, and it sucks. It flat out sucks, right? As much of a failure financially as their VR division has been, I think their VR products are pretty solid. I think the Meta Quest is a decent product. I think Beat Saber is one of the best VR games. It's like VR's Tetris, right? So Facebook and Meta own some interesting things. Like they own Instagram, right? But now they're shoving this Maps thing into Instagram. They're shoving AI into both Instagram ads and Facebook ads. They're shoving ads into WhatsApp. They're trying to integrate Messenger with all of these things. And we had that parade of ass kissers at the I don't know if it was the Oval Office. It looked like a apprentice boardroom, right? When Tim Cook was kissing everyone's ass, thanking our dear leader. Let me see if I can find that. There's here we go. Apologies, I may pull up Twitter here for a second. I know everyone here loves Blue Sky, but sometimes the actual conversations aren't happening on Blue Sky. I know it's shocking. It's really shocking to hear that, but sometimes Blue Sky is not the place to be. I know. It bums me out too. But yeah. Look at this. Look at this fucking guy. This is a picture from South Park, but this actually happened. Tim Cook went to the White House and gave Donald Trump a plate of glass on a stand made of gold and thanked him and said that Apple's going to spend $600 billion on manufacturing products in the United States of America. And then they increased the price of iPhone and claimed it wasn't due to the increase, it wasn't due to inflation, and it wasn't due to tariffs. Well, what the fuck made you go, let's charge another $100 for the top of the line iPhone? But when you have every CEO of the tech industry kissing the president's feet after banning him in January of 2021, it really tells you that this is a rigged stock market. And it's just too hard to bet against it. So while every fiber of my being feels like I should be shorting Meta right now, I know that Mark Zuckerberg is kissing Trump's feet. And they're going to get preferential treatment in the market as a result of it. I know that Tim Cook is giving him gifts. I know that YouTube just paid out a $20 million, $25 million settlement for banning Trump in 2021. You have companies apologizing for banning Trump after the insurrection attempt of January 6, 2021. So I can't bet against this market. I simply can't and won't bet against this market. Which brings me to a very important point of this show. I have come up with a name for this stock market. Would you like to hear it? This is the Thelma and Louise stock market. I repeat, this is the Thelma and Louise stock market. Let's take a look at what happens at the end of Thelma and Louise. Let's just say Trump and the tech industry are Thelma and Louise in this analogy. They're holding hands. And they're driving off a cliff together. That's the stock market. It's hard to bet against. It's hard to bet against such rampant corruption. And it's not just, it doesn't just stop there, right? Like, yeah, they're giving gifts to Trump. So what? Right? That's not the end of the world, right? That's not the end of the world. But they're going back on what they claimed the ethics of their companies were back in 2021. And they're just showing you how they blow in the wind. Oh, Joe Biden's great. Oh, Obama's great. Oh, Trump's great. Trump's terrible. We were going to work with both administrations, right? Both sides. They're both sidesing us. But they're doing it in the interest of just making money. But I want to bring up, last episode we talked about Intel and NVIDIA. I want to bring that up again because this is crazy. Where's that article? Shack News. So last month, the U.S. government took a 10% stake in Intel, right? This month, NVIDIA announced a $5 billion investment in a joint venture to make AI chips and consumer PC chips in the United States of America at Intel. Intel is now up up almost 50% from when Trump bought it for the United States government. So I'm sure he's going to view this as a great success. But the whole thing, owning the means of production is a socialist thing. And the Republicans are doing this. The champions of the free market, the GOP, they're the ones doing this. So when you have Jared Kushner buying EA, and you have Donald Trump taking stakes in companies with U.S. money, and then clearly brokering a deal with NVIDIA, how can you bet against this? How can you bet against this market? It's troubling because I don't like the valuations of many things here. You're not going to hear me be like, oh, it's a great deal. Yeah, go buy some Intel at $33. But why would I short Intel? I wouldn't short Intel with the U.S. government as a shareholder. What's to stop them from taking another 10% stake? This is clearly late stage crony capitalism off the rails. And you can't fight it. But at some point, right? At some point, this is all going to derail. Because what's actually happening in the real world, what's actually happening to the average American is prices are going up. Wages are staying the same. People are losing their jobs. Mortgage rates didn't even go down. Mortgage rates went up after Federal Reserve cut rates. The Fed cut rates, by the way. So they see an issue with the global economy, right? So, like, when you look at all of this, you combine all of this, it's hard to go out and short this market because you could wake up one day and your company has been acquired, or the government has taken a stake in your company, or the tariff god has smiled down upon your company and your company only. Because guess who doesn't have tariffs on their phones anymore? Apple. Why would I bet against Apple if they're getting preferential treatment? Why would I bet against Meta? Why would I bet against Google? Why would I bet against Nvidia or Intel? Right? Or Tesla even. It's crazy. This is a crazy stock market. It is just simply a crazy stock market. But yeah, let's look at a few more charts before I go. Apple had a hammer up, so it's trying to go to all-time highs. It hasn't hit there yet. The all-time high is $260.10. It hit a quarterly high of $257.60, so you're going to want to buy it there if you want to play it for a breakout. I said this last time, but I'll say it. Like, I have one final target for Apple. It's $323 a share. You can decide your risk tolerance based on that. I own some shares from a long, long time ago, but I think Apple has fallen. I don't think Apple is the company it used to be. And I think their products kind of suck. I think some of their products straight up suck. I think the design of some of their products is ugly, which is rare. Rare for me to feel that way about Apple products. Usually they look nice, and iPhone Air might be cool or whatever, but and maybe there's still some talented people working there, but for the most part, I would avoid Apple. But fuck me, the market says otherwise. AMD, outside quarter and up. This is one of those. It really got beaten down. You could have bought AMD for $76. It's currently trading for $161. Volatile year. We're going into the end of the year here, but yeah, volatile year for AMD. But yeah, you can see if it can stay above that. Let's look at the monthly chart. Yeah, it's kind of in no man's land. I wouldn't really touch this stock. Amazon basically did nothing this quarter. So you're going to watch. I think we may see some of these stocks kind of just sit here and do nothing, because a lot of people are going to try to speculate, to the upside or the downside. How did GameStop do during the quarter? I already talked about it, but GameStop was up 11.4% during the quarter. It traded inside quarter, so a breakdown below 21.92 would be a sell, and a breakout above 27.34 would be a buy. No problem, man. But yeah, you're still inside of this quarter where they diluted shareholders back in 2024, right? This was when Roaring Kitty had his stream. He was a billionaire for a few minutes, and then Ryan Cohen came out and screwed him over, and every other shareholder. We're still inside of that range. 1, 2, 3, 4, 5 quarters later. So it's kind of dead money in my opinion. I would avoid it. I own some shares from a while ago. I own some call options that might expire worthless next year. We'll see. Google. Did I miss any of the other ones? Google. Yeah. We already talked about EA. Google hit an all-time high this quarter. They got a stay of execution. Literally, Sundar Pichai literally thanked President Trump for the antitrust ruling. Like, this is the kind of feet kissing that is going on right now. Like, when I say that I can't bet against this market, when you have CEOs actually thanking the president for antitrust rulings in their favor, when this shit's going on, how are you supposed to bet against this market? How are you supposed to bet against these giant corporations? I did not own any Electronic Arts, Lucci. No. I was not in the game. But yeah, Google thanks the president for a favorable antitrust ruling. Tim Cook is handing him plates made of glass made in Kentucky, but also a gold stand, right? How are you supposed to bet against this market? How are you supposed to bet against this market? Simple question. Very difficult answer. I don't have the answer. such large things. Real quick, here's a stupid stock I own that did very well. Remember a few quarters ago I bought GoPro? It's up. It doesn't make any sense. At one point it was at $3. It hit a low earlier this year of 40 cents. And it got to $3. So, okay. I do own that stock, full disclosure. But yeah, I don't know. Maybe GoPro's not dead. Here's Intel. Glorious leader took a stake in the company, and obviously it's doing well now. Netflix. Inside quarter at Netflix. Something to pay attention to. One of the largest companies in the world. $500 billion valuation. So a buy above 1338 and 77 cents. A sell below 1144 and 71 cents. That's a wide range. But if you look at the previous quarter, this is a volatile stock. Those are your levels to watch. If you want to short it, you would do it below 1144.71. That would be your stop if it gets back above it. And if you want to buy it on the long side, you're waiting for a breakout near the all-time high, which was 1341 and 15 cents. But you would be buying it at a breakout above 1338 and 77 cents. We'll save Nintendo for last. Nvidia, outside quarter and up. Glorious leader smiled down upon them. They took that stake in Intel, so they're getting a stay of execution on the tariff front for now. Although there's still some laws about AI chips being sold to China and stuff. I think Nvidia has kind of become a punching bag in these tariff negotiations, unfortunately for shareholders. I do own this in some accounts that I manage. You would buy a breakout above 187 and 35 cents and watch the downside below 151.49 cents. These are very wide ranges, which is why I think a possibility of an inside quarter is likely, given the volatility we're seeing in the market and the potential of a government shutdown, right? But you had an outside month in Nvidia too, so you'd have a buy above that same price, 187.35. So that would be a breakout to all-time highs. You're talking about a stock that is, woof. That is up a lot in the long run. Yeah. Back to the quarterly charts. CD Projekt Red had an inside quarter. Or CD Projekt, I think that's just what their company is called. The Red is the studio. So you'd have a buy signal above 19.45 per share and a sell signal below 16.11. I think this is now one of the most likely takeover stocks, right? This is a beloved third-party developer. They're making The Witcher 4. I would pay attention. They could get taken out. I don't want it to happen, but it could happen. Let me see. What is 27? They're valued at $7.5 billion. And they have the Cyberpunk IP. They have The Witcher. You know. People are still buying The Witcher 3. So it's just an interesting stock to watch. And it's obviously up on the year. So, the other thing going on here is you have a lot of yearly charts that are entering the fourth quarter. So what was an easy trend to follow, you're going to see some people take their gains before the end of the year. So that applies to a company like CD Projekt, that applies to a company like Nvidia, Apple, Tesla. Actually, is Tesla up on the year? It is, but it's trading inside year. This is gonna whatever happens at Tesla is going to be really weird. Because I get text messages from them. They're like, the tax credit's ending this week. It ends today. At the time that I'm recording this episode, the Tesla, not just Tesla, but the electric vehicle tax credit, the $7,500 federal tax credit for buying an electric vehicle is gone tomorrow. How will that affect demand? I think there's probably a pull forward in this quarter where Tesla may beat sales numbers, right? They may have better than expected delivery numbers for September. But what does this mean for their fourth quarter? And what does this mean going forward? And what does it mean when your CEO does a Nazi salute? Does that affect demand? It certainly did in Germany. Taiwan Semiconductor, close to all-time highs on the year. Outside quarter and up, same story as a lot of the semiconductors, right? That's another political football I'm not sure if people should be playing with. Take-Two Interactive closed near the highs of the year. This is a stock now that I think is the next. If people are like, well, who's next after EA? If you want to sports wash the world, why not buy 2K? You get WWE and you get NBA. You get Gearbox. Oh. And by the way, you get Rockstar Games and GTA 6 before it launches if you happen to acquire it. What would that cost? Take-Two is currently valued at $47 billion. If EA's valued at 55, what the hell is Take-Two worth? Especially in a GTA year. I wouldn't short it. I did short it. I lost money on it. I got out over $100 ago, thank God. But yeah, it's. I thought the timing of GTA was going to lead to a stock sell-off. But yeah, Take-Two is interesting, man. I don't know, man. I don't know what the Saudi fund is. I don't know much about their how much money they have there, but I know that they can just shake a box of sand and some more oil falls out of it and they can make more money off of it. So they have a lot of fucking money. They have more money than any entity I know of. It's funny. It felt like in the first part of my time at Shack News, the boogeyman was Tencent acquiring gaming companies and even websites. And now it's like the boogeyman is definitely Saudi Arabia, but Tencent's not gone either. They're still out there waiting to strike. Unity hit an all-time high this month, then sold off pretty hard. They seem to be getting some wins here and there. I think people have kind of forgotten how terrible they are. Speaking of terrible, yeah, Ubisoft with an inside quarter. Could this finally be the bottom of Ubisoft? No. Maybe. We'll see. Ubisoft sitting here around a $2 billion valuation. Hit a low of $190 a share. You want to look at a terrible stock chart, Denny. Here's Ubisoft since 2018 when it peaked at $24.55. It's currently trading for $2.24. It's funny you mentioned that, Lucci. The Kingdom of Saudi Arabia is interested in buying Ubisoft, but there's actually a subsidiary company. There's a subsidiary company that now has a $1 billion investment from Tencent, not the Kingdom. But maybe the Kingdom will buy it someday. But I do think that's kind of interesting. It's like a $2 billion subsidiary, and the company's only valued at $2 billion. So the reason I bought Ubisoft is I think it's trading at a discount to the sum of the parts. The problem with that is they lose money. So if they keep losing money, the sum of the parts decreases every quarter. That's the risk. But as the turd miner, I have to mine turds. And I couldn't help but look at this terrible stock chart and want to buy it. Just on a pure speculative position that I think it might not go to zero. Like, in this environment where IP is valued at, Electronic Arts is being valued at $55 billion, and you can buy Ubisoft for $2 billion, it's a relative deal. But it's a relative deal for a reason, right? And you got to know your risks. That's about it for the gaming companies that I wanted to talk about. But there is my largest holding, Nintendo. Let's see what's going on at Nintendo. I don't know if you guys remember, but I pointed out this Nintendo Switch uptrend. It has been a ceiling every single time Nintendo has gotten to it. And it was again. We hit an all-time high of $24.92 a share in Nintendo earlier this quarter, only to sell off from it again. Now, is this going to be like 2018, where it fell from $11 down to $6.40, a 40% decline in about a year? Or is this going to be like 2020? The end of 2020, 21, where you had the stock go from 16 all the way down to 9? Or is this going to find some footing somewhere soon? Because the Mario movie is a-coming. The Mario movie is a-coming. And there are other catalysts. Namely, Pokemon Legends ZA. So, what could possibly happen here? I call this the Switch 2 uptrend, okay? Switch 2 uptrend started here. We broke it. We broke the uptrend to the downside. So maybe the Switch 2 uptrend will not hold. Okay, we have a downtrend that we could look at that started in June. Maybe this is the downtrend. And that could take us as low as $17 or $18 before it would find some footing. Do I think it's going to go all the way down to $11? Probably not. That low end of this broadening formation? No, I don't. I think there's positive catalysts ahead. I think the Switch 2 is selling rather well. They have avoided the scalper issue here in America. It's selling extremely well in Japan. There are still lotteries happening to buy the Switch 2 in Japan. It's very hard to buy the accessories in Japan, too. So, there seems to be demand for their products, and they've put out some bangers this year. Donkey Kong Bonanza, Mario Kart World. They got Pokemon Legends ZA coming. They got Metroid Prime 4 Beyond coming. And both Pokemon and Metroid are cross-generational, so they're going to sell on Switch 1 and 2. So that's an addressable market of 160 million consoles that those games can sell on. Same with that Mario Galaxy 1+2 bundle that David Craddock reviewed on ShackNews.com today. But yeah, undeniable that Nintendo is in a bit of the shit right now as a stock chart. But you had an inside month in July, followed by an outside month in August, followed by an inside month in September. So what's going to happen here? When you have an outside month, you have an instant broadening formation because equilibrium couldn't be reached. You have an uptrend and a downtrend to pay attention to. So next month, if we break down, it could get to around $18.84, $19 a share. If by some miracle we break out, the stock could get above this $24, $25 area. It's possible that both happen. That we go down below it and then go back above it, or we go above it and then back down below it. But I would just say that there is a very large catalyst here in the month of October. It's called Pokemon Legends ZA. I would not sleep on that. That is a big deal. That is one of the largest games to be released this year. It's probably going to sell well. Based on the previews that Ozzy and Donovan have written for Shack News and talked about on our podcast This Week in Switch 2, you should check that out. Yeah, interesting setup. So on the monthly chart, you sell Nintendo short below 21.30 on the monthly. On the monthly, you would buy it on a breakout above 24.29. So that's your risk range going into the month of October. Obviously, on the quarter, it's kind of chugging there. It's important to note this is still up on the year. A lot. This stock is up 45% on the year. That's a big deal. That means it has momentum behind it. Oh, by the way, there's a Mario Galaxy movie coming out next year. You think people might go watch the Mario Galaxy movie? Anyway, I'll say this. And I haven't been that confident. Last quarter, or last month, last episode of Game Trader Live, you'll remember I cautioned about that uptrend. I said, I'm a little worried about this stock. It's approaching this uptrend. Well, it didn't get above the uptrend again. So now you have a risk range to pay attention to. Below 21.30, there could be some selling. Above 24.29, there could be some buying. Below 21.30, there could be some selling. Above 24.29, there could be some buying. So I'll say this. If you're gifted Nintendo below 20 a share, Nintendo below 18 a share, if by some miracle it drops to 16 a share, I would buy it. I don't normally say that. I haven't really recommended people buy many stocks this year. And yes, this is my largest holding. I'm talking my own book. I already own it. I own it at lower prices. But if I didn't own it, and I have cash on the sideline, in one account I have a large portion of my portfolio in cash, which is losing value because the dollar is on fire right now. So if I am going to deploy capital, I have considered buying more shares in Nintendo. I just don't think it's the right time right now, but it might be soon. It might be. But I'm going to wait. Maybe if like something happens with the stock chart in the next month before our next episode, I might do like a short video where I kind of call it out and say, hey, this is a good opportunity to buy. In my own personal Discord where I hang out, just with some of my friends, the year that the Mario movie was coming out, when it was sitting there at $9.26, I was like, hey, I think this is a really good buy here. And it was. I don't know if we'll have that great of an opportunity again, but we now have a risk range to pay attention to. And I think, sorry, I wasn't showing it on the chart, but yeah. Back when it hit this level down here in 2023, I was like, hey, you might want to buy this stock. It doubled from there. So, there's obviously macroeconomic issues. There's the volatility in the United States. There's the U.S. consumer that is in trouble. And there's the fact that the Trump administration is affecting the Bureau of Labor and Statistics reporting. They delayed an inflation report. They are denying the validity of some of the employment numbers that are coming out. They fired the head of the Bureau of Labor and Statistics because they didn't like the jobs number. They restated the last year the Biden administration's job creation numbers. But the Federal Reserve, maybe I'll bring up some of those clips before we go. Because those are actually quite interesting. I have some clips that I posted to the Shack News, our community Discord. See if I can pull these up real quick. Yeah, they said something in the press release for the Federal Reserve that I thought was interesting. But let me queue up some clips for you folks that we can watch from the Federal Reserve chair. I apologize. They're not Blue Sky posts. I don't have a Blue Sky post. I'm just not cool enough for Blue Sky, I found. Someday I hope to be as cool as the people on Blue Sky, but right now I'll be over on Twitter. I was there first. You know, it's a kind of from my cold dead hand situation, right? But yeah, I got 3 clips from the Federal Reserve that I would like to play before we go. And yeah, you should check out our community Discord. I talk about stocks in there a lot and keep people up to date about, you know, not just gaming news in the finance industry, but all over the place. You know, we had Starbucks announce that they're closing stores. So if you're into finance news, check out our community Discord. But yeah, I have 3 clips from the Federal Reserve that I'd like to play for the folks at home before we go. And these are from the press conference. They after they lowered interest rates. Here's the first one.
You and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thanks.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
So that's the first clip. I thought it was interesting that the Federal Reserve Chair said that our immigration policy in the United States is affecting employment more than anything because the immigrants that were here illegally, allegedly, you know, in some cases, they were willing to work for less than the average American, right? And so if you know, I live in a state where there's a lot of farms. I see farms closing because they can't afford to harvest their goods. We grow a lot of soy here in Ohio. No one's buying our soy. And news came out today that the Trump administration is actually subsidizing the sale of Argentinian soybeans to China indirectly. So they're taking our government money, our taxpayer money, and they're funding the trade for Argentina and China instead of helping American farmers. Now, I'm not saying bail out the American farmers because a lot of these people voted for this administration, so fuck around and find out, right? What I'm saying is that this immigration policy is increasing the cost of everything, and now businesses are shutting down, so if we ever get out of this tariff trade war, there's not going to be any businesses left to hire the people. That's what they're saying. Demand and supply of workers is down? That's terrible news. Terrible news. And this is scary too. The Federal Reserve Chair went on to talk about this.
For a year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to.
He's talking about the 2% inflation target that the Federal Reserve had operated at. They actually removed it from their statement. They now don't think that they can actually maintain 2% annual inflation. And if you factor in inflation during the Biden administration, post-COVID, and during the Trump administration, it's way the hell higher than 2% a year. And we're not reverting back to those pre-2020 prices.
2% inflation in 2028 at the end of 28. But that's, you know, that's literally how you put the projections together. You're writing down a rate path, which is designed to create over the course of the SEP, you know, time frame, 2% inflation and maximum employment too. So that's all that is. You know, no one really knows where the economy will be in 3 years.
No one really knows where the economy will be in 3 years, says the guy who has more economic data than anyone in the United States. The guy who's supposed to know where things are going. The guy who provides a 3-year forecast doesn't know if that 3-year forecast is going to be real or not.
But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
So that's not encouraging. That means that they don't have a handle on inflation, and they just cut interest rates. They just cut interest rates because of that first clip I played where the economy, the labor market is in trouble, and they see it. They're like, the labor market usually starts to weaken before the economy collapses. Here's the last clip, and then maybe we'll wrap up the stream there.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are.
Oh, just minorities and young people. No biggie.
Are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
So he just said it. That's why they lowered rates, is they see there's not a lot of hiring. They claim that there's not a lot of firing going on. If, you know, in our industries that we pay attention to, there's been a lot of firing in the last few years in the video game industry and in the tech industry. But on the broader scale that he's using, there hasn't been a huge amount of that. But to his point, no one's hiring. So when you lose your job, you're less likely to find another job than you were a year ago, 2 years ago, 5 years ago. Maybe not 5 years ago because the pandemic was crazy. But yeah, those are 3 clips from the Federal Reserve Chairman's press conference after the rate decision to cut rates that I thought were important to share on this show and share my thoughts on it. Because that, like, yeah, I can talk about individual stocks till I'm blue in the face, right? I can talk about why I like Nintendo long term. But if people don't have a job, or inflation gets out of control. You look at energy prices in the United States, you look at utility prices, that damn thermostat over there. But like you look at the cost of living in the United States, it's going up. And you look at the wage growth in the United States, it's not keeping up with the inflation. And if they said they don't even know if they have a handle on inflation anymore, and they have to cut rates before inflation breaks, that means prices are going to go higher. So if the prices are higher, How are people going to be able to afford a $450 Switch 2 or a $500 Switch 2 bundle in America, which is their largest geography? How are people going to afford this product? How are they going to afford $70 games, $80 games, God forbid, $100 games? How are people going to afford to consume at the rate that Americans are expected to consume at? That is a huge risk to owning any consumer discretionary company right now. And Nintendo, it is consumer discretionary, especially in a launch year of a console. That is a discretionary purchase that you make if you have the money to. Maybe it's like the one big thing that you buy this year, right? Is that bundle. Maybe it's Pokemon ZA, maybe it's the Mario Kart World bundle. Maybe that's like the one game that you actually have this year. Affordability is going to become a problem, regardless of if Donald Trump's administration has their head in the sand about it or not. It's a problem, and they need to address it. And they won't, because they want their citizens to die. And that's a whole other issue. But yeah, I'm going to pull up one last chart before we go. This is the volatility index for the year. We had that huge spike up to 66 in April. We had another spike, it was August of last year we had a spike. Then it was, April we went to 60.14 on the volatility index. We're currently at 16.28. Donald Trump is volatility incarnate. I think the VIX is not priced properly. But I've said it, it's kind of been the theme of this show. It doesn't matter what I think. The market's going to do what the market's going to do. And the market and Donald Trump are holding hands. They are Thelma and Louise. And they are holding hands. That's the stock market. We are in the Thelma and Louise stock market. That's what we're in. And that's an insane situation to be in. That's the stock market. I don't mean to be all doom and gloom, but a core of this show has been to tell people to manage your risk. Understand the risks that we are witnessing here. And take them into account when you make any financial decision, be it buying a house, buying a car, using debt to buy things, paying down your credit card debt, whatever it is. Understand the environment we're in right now. We have tanks in city streets in the United States. We have a clown car of cabinet members that don't understand a damn thing about the industries that they're in charge of, be it health, be it the Treasury, be it the FCC, be it the Department of Defense, which is now called the Department of War, a Department of War that has declared war on cities, predominantly cities with black mayors, predominantly blue cities in the United States. Take all of that into account and know that this is not sustainable. I don't know when that moment of Thelma and Louise going off the cliff will happen, but I know it will. And I'm going to warn you about it every episode until it does. And yeah, I may sound like Chicken Little for years, but I will manage my risk and I will try to get you to do that as well, you know? So that's it. Pretty good show. Nice production upgrade, right? I got a fancy new camera, fancy new computer, fancy new microphone. Hopefully it sounded good. Hopefully it looked good. We even had some Blue Sky clips in there for you folks at home. Yeah, just a reminder, follow us on the Blue Sky, right? We had a hit Blue Sky post, right? It got 4,300 likes, 2,400 reposts, and 324 of the most interesting comments I've seen in a while. And yeah, I think it even tells you 1,400 quotes. Yeah, so follow us on all the socials. Check out our Discord. Obviously, like, follow, and subscribe on our YouTube channel. Appreciate everyone taking the time. Appreciate everyone taking the time to watch this. Share it if you know someone who's into investing. It would be helpful to get this out in front of other people. The technical analysis strategy I use was created by Rob Smith, who passed away a couple of years ago. It's called The Strat. If you look on Twitter at #TheStrat or on YouTube, you will probably come across some people who are also using his teachings of technical analysis. It's built on 3 concepts. One is the broadening formation. That's that everything trades in a series of uptrends and downtrends. Another one is of time frame continuity. You want to buy stocks that are going up on as many of the time frames as possible. Sell stocks that are going down on as many time frames as possible. And to look for actionable signals. So attempts to reach equilibrium followed by breaks in the equilibrium. Those are the things that you want to look at. Those are the 3 pillars of the strat. Shout out to Rob. I miss you, buddy. But yeah, he still has his YouTube channel out there. It's all really educational stuff. Highly recommend that as well. Thank you guys for watching. As always, manage your risk. I'll see you next time. The next episode of Game Trader Live, the monthly edition, will be on Friday, Halloween, October 31st. I'm going to have a basket of candy out there for the kids. And I appreciate everyone for tuning in. You folks really know how to do it for Shack News in a way that it really, really warms my heart. Let's we have such improved production value here. So as always, as I said, manage your risk. We'll see you next time. Thanks for tuning in. And do it for Shack News.